Good morning. Welcome to Market Mashup, our weekly recap of financial markets and what we have in store for this upcoming week that might impact stocks and bonds. I'm Scott Nasca, president of Generation Capital Management. Tough week for general financial instruments last week, but let's talk about the stock market first. We had a mixed market with the Dow Jones down just under 20 basis points. We had the S&P 500 up 1.58% and the Nasdaq up 4.4%. So definitely risk on in terms of the better performing stocks, was the Nasdaq leading the way, and Dow Jones was down basically because of a lot of the strains that took place in the banking sector. A couple points I want to make with the bond yields again. Pay attention. The 2-year currently is at 3.84% and the 10-year is at 3.42. So we still have an inverted yield curve where the short end of the market is higher than the longer end. However, that spread has dropped significantly. We were over a full percent, and now we're down to just over 40 basis points just within the last couple of weeks. So a big drop in terms of the inversion, and a lot has to do with the impacts that's been going on in the financial sector. We did see Silicon Valley Bank and Signature Bank both pretty much be taken out and taken over. Now we have Credit Suisse over the weekend being combined with UBS, both Swiss operations, in an arranged marriage there. Obviously with a lot of backstops, but definitely a lot of reminiscing in terms of reminders of what happened in 2008, where you saw some of these events and marriages and unions take place over a weekend. So we're seeing a lot of the similar things out there. FDIC is getting very much involved with depositors, especially those few banks that failed in the U.S., guaranteeing all deposit levels. We did see some runs on those banks, and it put pressure on the balance sheets, and they had to liquidate investments that they had that holding to maturity would give them true value. But since you had to sell early and with interest rates going higher, they absorbed some losses there, so that didn't help. So definitely you're seeing some pressures in the financial banking industry. You got to pay attention. We've got some big news coming out this week with the Fed interest rate decision, which will be coming out on Wednesday. A couple of weeks ago, 50 basis points was pretty much planned. Now we're even hearing talk that there might not be any increase in rates in the March meeting now. And some are also saying maybe 25 basis points, but definitely the Fed and the Treasury are in a little box right now in terms of what's happening with the financial conditions. Now we're starting to see, instead of inflation, deflationary situations taking place, especially with some of the bank issues out there. So there's a lot of cross currents going on right now, and it's definitely putting the Fed in in a box. So we got to see exactly how they're going to come out with it, but pay attention to what the market's reactions are going to be. Like I said, we had some positive news to try and shore up financial sector over the weekend. So I think the markets are going to open up higher to begin with on Monday, but 5 days is a long week, and we can see a lot of things happening. So pay attention. Make sure that your portfolio is allocated the way that you should. If you need liquidity needs in the shorter term, you probably shouldn't have as much risk out there. Definitely if you have deposits in banks that are over $250,000 in an individual single account, you want to pay attention to that because they're not insured. So you want to be cognizant of that fact. Not saying anything's going to happen immediately, but you always should try and risk manage your cash balances as well there. So pay attention to that. In terms of data, we also have new home sales coming out on Thursday and durable goods coming out on Friday. But obviously all eyes are going to be on the Fed on Wednesday, as well as how the the financial markets and the financial stocks, the banking stocks, how they fare at the beginning of the week as well. Like to see some strength coming back into those, and we'll basically pay attention. So any confidence you can get in those will be a plus to the markets. Feel free to check out our website, www.gencapmgmt.com. Take a look at our blogs, John's top tips for financial planning, talk a little bit about FDIC and his communications that he put out. So please take a look. We're ready to answer any questions you might have. If you want to get a second opinion on your portfolio, happy to help out any way we can. just reach out to us. We'd be glad to set up a time to talk and, just basically advise and give you some, consultation in terms of these, more trying times. So we're here to help. Please feel to reach out to us. Once again, my name is Scott Nasca, president of Generation Capital Management, and this is Market Mashup. Have a great week.